Hello and welcome to the Wendell Effect. My name is Brandon Wendell, Chartered Market Technician, and I'll be your guide here for the program. And hopefully you're enjoying this. If you do, please don't forget to subscribe, hit like, and follow. That way we know that you guys are out there and paying attention to us. We can go ahead and continue to put out some great product for you, information about the markets, analysis, things like that. So I'm going to go ahead and kick this off. I'll just reduce myself down here. And remind everybody, we are not registered broker-dealers or investment advisors, and we are basically doing this for educational purposes only, just talking about the different markets that are out there, what my opinions are. And again, they are just my opinions. I'm not doing any personalized recommendations. There's also risk involved in the markets. No matter what you do, you can't eliminate the risk. We can only try to minimize it by making the right decisions and putting in protective stop losses. Additionally, Trading Mindset Association personnel are not subject to trading restrictions. We could have a position in a security and initiate one at any time. So that being said, if you want to stay in touch with me, you've got a few different ways. You've got the email, thewendelleffect@tradingmindsetassociation.com. You can also hit me up on Twitter @TraderBDub, where I tweet pretty much every day about the markets. You can obviously search for the Wendell Effect on YouTube and also make comments on the YouTube videos as well. And you have our website at thetradingmindsetassociation.com. So this being my weekly episode, I wanted to announce that we've got a change coming very, very soon. What I'm going to be doing is actually, because of the popularity there's analysis, obviously, that people love, and there's also education that people love. We're going to separate the two, but they're still relatively related. So the chart school will no longer be a part of this video. This video will basically be a mix of analysis and my thoughts about where the markets are going in the short term, as well as medium and possibly long term. And we're going to be looking at various markets together, and I'll be taking, again, requests. We'll even do some live episodes coming up. Hopefully next month, we're going to be looking to shoot for a live episode or two, maybe more. We'll just see how it goes. So I just want to get that interaction with everybody, obviously, and make this program as best as possible for you, the viewer, the trader, the investor. However, we don't want to forget about Chart School, because that's been very, very popular. People love to learn more about the markets and the way that we look at the markets. So I'm going to spin it off as its own kind of a educational video series, where I'll be talking about the different markets as far as education purposes and how they work. So look forward to that coming out this week as well. So I'm not going to put it off too long. I want to get it out to you because there's a lot of info up here, and I want to share it with everybody because that way it can benefit all of us. So that being said, our schedule for this week is going to be kicking off with market analysis, of course, the weekly market. I'm going to take a look at the equity index futures. Moving on to the energy futures, I've got that already pre-planned. A little bit of sector analysis when it comes to stocks. And of course, if you want me to analyze individual securities, if you've got some ideas or things you're looking at in the markets, you want to know what's happening with these securities, let me know. Message me, Twitter, here on YouTube, wherever it can be. You saw the information there before, emails, just let me know. I'm here to help, and I love the input, the feedback that I get from everybody as well. I'm also going to cover the Indian markets. I haven't forgot about those, and we're just going to jump right into it. I'll start off, and actually, it's not the week of May 15th. Sorry, we are starting off with the week of May 22nd, which I forgot to change that. So, and Lucy's reminding me back there. Yes, Lucy, I know I had the wrong date. Okay, my bad. So here we go. We'll go ahead and change it over, and I've got the weekly chart of the ES. As you can see, we tapped that demand zone on the weekly chart last week, and I was wondering if we were going to be able to push to the upside. I wasn't really bullish on the markets this week, and the reason why, I mentioned it last week, we had gone below 40 here as we dipped down into that area of demand. So the fact that we went below 40 tells me that we really don't have a lot of bullish momentum, or any really. It's mostly bearish momentum in these markets, and there's almost no way that we're going to be able to stay up. In fact, oops, sorry, wrong button there. It looks as though we're going to continue to move to the downside. If we get any kind of a push upwards, it's going to be very, very short-lived. So I wouldn't get too excited about any rallies. I'm actually looking to possibly sell the rallies rather than trying to look for bottom picking at this point. It's not the time, honestly. It doesn't look like it. It looks like it's more likely to be, again, opportunities to sell the rallies. What do they say? Buy the dips, sell the rips? No, we're not going to buy the dips right now. We're going to sell the rips. So you can see we couldn't follow up with a new high this week. We did make it a lower low, though, and we even closed lower at the end of the week. So yeah, altogether, this was very bearish, and we're still on our way down initially to 37.33. and then maybe 36.55. That may be our low coming up this week. One of those 2 points, which is 127.2 and 138.2 extension of the prior move. We've already made the 100%. That was above 3,900 right here, just barely above. I took it off the screen. So right now we are expecting, or I should say I am expecting on Monday, a little bit of a push possibly to the upside. And the reason why I say that is looking at the chart right here, you see a positive divergence where prices made that lower low. However, we had a higher low on the indicator. So when you see that, the momentum was not as bearish as it should have been if we were going to continue straight down. This doesn't mean the markets are turning around. Don't think that you need to buy. Again, it's just simply telling you that we're going to get a bit of a bounce here and retracement of the downward move. That's all. And you can even see it in the candles too. We had that big sell-off day, was that Wednesday, and then Thursday, Friday was back and forth. Made a fresh low, but couldn't hold the low. So we're not out of the woods yet. If you're shorting, this is great. We're going to get more opportunities to get in. So if we get a pullback here on the 4-hour chart, we already had one that did 50% retracement. So, actually it wasn't. I mean, this was on our move down. I guess we could possibly measure this and back, but overall, going from the recent high to the recent low, we've pulled back close to 38%. I think we're going to go a little higher. We might even get as high as 39.81. I don't really see us going over 4,000. If we do, honestly, the Fibonacci level may not work. It might actually be this area of overlap right there, which is going to be about, 40.22 or 40.20. But honestly, I think that the retracement value of about 39.81 is probably going to be our high this week before we drop down again. So jumping over to the Nasdaq, you can see just tons of weakness. This week, we actually put in our move to the 100% duplication of the prior impulse down. So that's what we see as our current low here. And we see lots of momentum to the downside. So it looks like it wants to continue. Even on the daily chart, yeah, we have a divergence once again, but we were so bearish, we've gone into bearish territory that this is just going to be a small retracement before we continue lower. The question is, how far is it going to retrace? We'll see. We had a retracement already back up 50%. And honestly, if you measure this move down, we're probably looking at a 50% move already right there. As a matter of fact, let me see if I can jump into my charts. Should have that available here. There we are. And then go to NQM 2022. Looking at the daily time frame. That's what I'm on. Okay, so let me clean up this chart. And as I was mentioning, the movement or measurement that I have was this one, where we had that impulse down, correction up, that was 50%. Technically, we're in a new impulse down, and therefore, if we correct up, it may be based on this. It's kind of hard to see. I just zoom in a lot, but you can see we've gone back 50% or so. Should be able to push a little bit higher, I think, this week. Might be able to make it to 12,159 before we collapse again. And if we do, let's take a look and see where we're headed. And you see you had this retracement. Look at that. It almost made it to the measured move, not quite. So now, depending on where we retrace, I would use this as our measurement. So let's say we do go back to the 61.8, then we should retest the prior lows and ultimately push down to 11,061.50 before we stall again. So that may end up being the low for this week coming up. That's what I'm seeing. Possible pullback a little bit more than what we've got right now, maybe Monday or Tuesday. Again, later in the week, Wednesday, Thursday, Friday, complete sell-off once again, continue to push to the downside. That's what I see. So, continuing on here, let me just get us back to my slides. On the 4-hour chart, you just see a little more detail, that's all. I actually should do that on the live chart here. Again, going to the 4-hour, look to see, is there any sort of supply along the way? Well, yes. Honestly, if we're retracing from these lows, this 50% retracement area is actually a zone now. You have rally, one basing candle in that, or the one red candle, and that 50% retracement is right in the middle of that, actually. So that would even be a better target than the 159. You'd be looking at 12,031 for the pullback, and that may be all we get. So this has been a very bearish market. We'll see if that continues. You can take a look at some of the makeups of the index. And what I did here is I actually went to the ETF that follows or, basically mimics the index. And you can see that the major players there are Apple and Microsoft. We also have Amazon as well, Tesla, So there's quite a big few names that, the FANG type stocks. And basically, if you follow those stocks, you get an idea of where the overall market's likely to go. So let's take a look at that. You take a look at Apple, and you can see it's setting itself up for a bit of a pullback as well. Apple sold off dramatically, didn't close at the low of the week, but it did close pretty low. A little bit of buying pressure off that bottom there. However, we have a positive divergence, and the positive divergence means that we should get some sort of a correction this week, may push back up towards this 50% retracement, and where Apple goes, so goes the Nasdaq for the most part. It's kind of like it's not really a canary, if you will, but it's the egg and the chicken. Obviously, people are watching the index and know where stocks are going to go, but the stocks often tell you where the index is going to go because that's what makes up the index. So which one's going to blink first? Don't know. It's usually going to be the stock that you'll see, especially the leading stocks like Apple and Microsoft, Amazon, Netflix, the FANG stocks. Actually, it's FANG Man now. There's a few extra in there, Microsoft being one of those. So looking where those stocks go, that's where the market's likely to go. This is suggesting we're not going to change trend. We're still very bearish here, but we should get a small pullback in the beginning part of the week. Additionally, looking at Microsoft on the daily chart, same thing. We had a pullback about 50% right here and are starting to impulse down. We almost hit the target already of 0.618. That's the 61.8 extension of the previous move. So now what we're doing is we're retracing back. And you can see after these lows, we've already bounced back about 50%. This is where we opened and we closed a little lower. If we get any more movement up on Microsoft, it's not going to be a whole lot. I mean, we'll be lucky if we see 260 and then we're likely to sell off once again. So I'll be watching, again, the major stocks like Apple, Microsoft, Amazon, Tesla, NVIDIA. It's not Netflix anymore. It's NVIDIA. That's right. And Google, Alphabet, if you will. So looking at those, and Facebook, there's the F for the FANG. So you look at those to give you an idea of where that market is likely to go. Those are the leaders. So looking at the Dow, you can see we also impulsed down and hit our target here. And more importantly, on the weekly chart, we got lots of bearish momentum. That's going to continue. If you take a look from the beginning of the year, let me see, I think I have that available too. If I go back to my percent change chart here, which I'm going to do, clean this up, and I'm going to go to a weekly basis. Oh, we're already on it. There we go. So if I go back to January of this year, there it is. You can see where all the markets are right now from January. These are the futures. Nasdaq's down 24%. That's completely in bearish territory. Bearish market territory is technically 20%, and we'll get there on everything. The Dow's been holding up the best, but that's still down 13.5% for the year. You got the S&P down 16.5% roughly. The Russell's also very weak. So the two leading markets down are definitely the Nasdaq and Russell. And that's why you want to follow things that are major players. The Russell's more evenly balanced. It's over 2,000, or it is 2,000 stocks. The Nasdaq's only 100 stocks in that index, and it's mostly weighted, as you saw, with Microsoft, Apple, and those guys. So anyway, looking at the Dow, it's just kind of following, but it does have a positive divergence here on the daily chart, suggesting the pullback just like the other markets. If you're looking to buy anything, it's probably the Dow is where you want to buy because that's the one that's been holding up the best. Although, unfortunately, the volatility is really in the Nasdaq and the Russell, so better moves sometimes come from those, even though it's not the leader to the upside all the time. They try to take over and become the leader that way. So that's all I'm seeing right now on the Dow. It's really not something I'm interested in trading. I'd rather trade the Nasdaq or the Russell just because I think there's more opportunity there. Again, they're kind of the leaders both to the upside and the downside, and it just gives you better trading opportunities. The Dow's okay if you want to follow everything, but the profits are going to be smaller and the risk might be a little bit larger, which is not something we want to do to ourselves. So, you can see, looking at the Dow, what did I do here? 4 hour. How do I go back to daily there? It's kind of interesting. Weekly. Oh, because I'm going the wrong direction. There we go. So the Russell's where I wanted to go next. You can see the Russell doesn't show as big of a move down. It didn't do the 100% move down yet. And interesting enough, on the Russell, there's a little bit of bullishness coming in because you can see on the chart itself, we actually made higher low and higher high this week. And that's something we did not do, I believe, on the other markets. You go back to the weekly on the Dow, and yeah, failing to make that high, and you can see we made a new low. And the same thing on the Nasdaq and the S&P. But the Russells made higher lows and higher highs from the previous week. So there's a little bit of a pullback expected here as well, and some underlying buying pressure possibly. Now, we don't really have any kind of signal necessarily that things are going to go up, but we're trying to make a higher low and we're struggling to stay above 40. So I think that this is just going to be a small correction. Doesn't look like we're going to get much more out of this before it drops again. We might just keep a lower high, as a matter of fact. If this trend's still intact, you see nothing but lower highs. Your most recent high here at 1840 should hold then if we're going to make new lows afterwards. So watch for that. Oops, sorry about that. The dog's going crazy again. All right, so looking at the 4-hour chart on the Russell, you still see the downward move, but again, the positive divergence. Prices making new lows, indicators making higher lows. That means you don't have as much bearish momentum on the next low. That's why you pull back. But that does not mean we're going to reverse trend. Okay, it's just telling us we're correcting a little bit. I didn't mark it off, but this area is a possible supply zone. Rally, base, 3 basic candles, and then the drop right there. So if we retrace to about 61.8%, yes, we'll break the high here. I don't know if we'd break the high on a daily. No, we just come into that prior high. That'd be a great shorting opportunity. Somewhere in the neighborhood of about 1830 to 1840 is what you're looking at for a possible shorting re-entry for the move to the downside towards the end of the week. So look for that on the Russell. Moving on to the energy markets, and this time I have the date fixed. I took care of that already. We're looking at the week of May 22nd, which is actually today. The day I'm recording is May 22nd. So weekly chart of crude oil, nothing's changed here. We just basically tagged the bottom of the trend line and tried to rally back up last week and pretty much closed right at the top of the overall flat trend line we had there for this ascending triangle I talked about. We've lost a little bit of momentum. That's to be expected. That happens in sideways motions, but we're still looking like we're going to break to the upside. So you go down to the daily chart and you can see we kind of broke out and made some highs, retested, reheld. So actually this was a small little level of demand right there. You had rally, base, rally with highs there, and we used it and bounced. So I think we're going to make some new highs beginning of this week. Looks like it wants to go up. Could even happen on Sunday night going into Monday. We'll just have to wait and see. But there's definitely enough bullish pressure still in place to keep us moving up. And we've got the possible breakout of this symmetrical triangle, or I'm sorry, ascending triangle that's going on. So not seeing anything else on the 4-hour. Actually, let me go back here to my live chart and go to that 4-hour time frame on crude oil, because I think I missed something there. So putting in crude oil, I am on the 4-hour, and yeah, this is what I was looking at right here. You can see drop, base. It's not a great demand zone though. It's too wide of a zone, not enough of a move to the upside. So I was wondering if there was an opportunity somewhere to buy, and I don't see that as the good entry spot. It's also kind of retesting a prior area. Let's drop down to 60 minutes, see if there's anything better. Not great, but there may be something here. Keep an eye out for. Rally, base, and notice this broke out of prior highs. So if we pull back to about 109.59 to 110.51, keep an eye out for that. We're currently pulling back from this hourly area of supply, 114. So the only way we'll break through 114 is if the momentum is there. You got to be above 60 on the RSI as we come back through that area. So what I'd look for a possible entry here is to buy on the pullback to 110.51. I simply place my stop underneath. Probably going to be looking at something like 109.50 or so, 52. It doesn't matter. You know, the zone's going to hold. Should hold at the top and bounce. The other thing that should happen is the RSI, when it comes into demand, should not be below 40. If it's below 40, I cancel the trade. It's not going to work. But if the RSI is above 40 as we hit this area of demand, I'll look for a long opportunity at 110.51. Target number 1 is going to be this area. And then target number 2, actually, probably use extensions. That's the case, depending on where we end up peaking. And then I've got targets of 116 and 119.40. So that's what I'd look for on crude oil. Possible push to the upside coming pretty soon. So looking at nat gas, I thought it was going to sell off a little bit more previous week. We did try to make a new high. I mean, you can see we still have selling pressure. We have trouble closing higher. We did get this overall new high close at 8.083, but the momentum is really dying off. You can see the topping tails and bottom tails. We're starting to consolidate a bit sideways. You can see that we're doing this. It's not really head and shoulders. Maybe it is. You got left shoulder going on right here, head, right shoulder. It's either going to be that or what we call 3 drives to a drop, where you get those 3 moves up and then everything drops. But normally the third high is higher than this head. So if that's not the case, where we end up doing something like this, then this is a head and shoulders. I mean, you got left shoulder, head, right shoulder. Watch that neckline. It's 7.5 this week. And you can see the momentum is dying. We're weaker and weaker, even though we're trying to make new highs. That's not sustainable. So I would imagine we're likely to see a possible pullback in price this week. And if we can break that neckline, I don't go short. Let me move this out of the way. There we go. I don't short on the break of the neckline. I typically wait to see if prices retest the neckline from underneath, and then I sell. So that's what I'll look for. By the way, lots of room to the first demand. The only serious buying pressure is at 5.012. So if it does break down, look for it to go for a bit. That's for sure. As far as NG on the 4-hour chart, we had that impulse down, corrected up. It does still look like it wants to drop more. And we retraced 3/4 of the way up, 78.6% on that pullback, and we're struggling to keep up there. Looks like the momentum is dying off and getting ready to drop. So that's what I'm going to look for, is that break of the neckline of that head and shoulders possible shorting opportunity here. Gasoline made a new high as well. Actually hit a measured move from the previous impulse. It duplicated it. No, not even as 0.618 times it. But look at the momentum die off. That's a huge divergence. That's going to lead to more selling pressure coming in this week. Looking at the daily, you see we started off with some selling pressure, tried to bounce. Again, a very weak extension, only 0.618 of the prior impulse up. But those weak impulses usually leads to a possible reversal coming, or at least, move this out of the way, there we go, at least a pretty good retracement. So I'm expecting more selling pressure coming up this week. Just got to figure out where to get in, to be honest with you. I don't really have anything great other than a little supply zone that's slightly higher than we are right now, 3.9494 to 3.9826. That's what I'm looking at. That's our next serious supply zone. Could cause us to drop pretty well. We'll just have to wait and see. It's weird because the other markets, these derivatives look weak while crude oil still looks strong. So will this work? Well, it could, but I don't like these trades shorting crude oil or gas. I'm sorry, shorting gasoline or nat gas unless crude oil is going down as well. That's kind of the leader for the energy sector, especially with gasoline. Crude oil is the the raw product, and you got the refinery with the gasoline later. So anyway, heating oil, you've also got the same thing going on. The negative divergence pulling back a little bit. Did see some buying pressure towards the end of the week, I believe. And we had that bounce after we pulled back into this demand zone that we had talked about the week before. So you see, we moved into that and held it. We stayed above 40, which means the demand should stand. And we should be able to get some more buying pressure pushing up. If not, we could fall back down to this demand zone. About 3.2 is the next area. You see the drop, base, and there's your rally. So watch out for that if it does go a little bit weaker this week. The 4 hours kind of suggesting that. You can see we had a descending triangle here with the flat line at the bottom. The lower highs here. We pushed through, retested, and it looks like we're getting ready to roll over and drop again. We couldn't even get up into bullish territory. So honestly, going back to this daily chart, I think we're going to be pushing down towards that 3.2 this week. That's what this seems like. So moving on to the stock market, or back to it, I should say, not on, because we were looking at the equity indexes earlier. We can look at the week of May 22nd here. And overall sector rotation, what did I do there? Okay, so I was missing something. Hold on. I don't know what the heck happened. I want to make sure I didn't miss anything on my slides there. So let me just go ahead and make sure this is all the way in the back. Oh well, I'll figure it out later. It looks okay. So this is basically looking at the 13th of May. That was last week and what happened with the sector rotation. And basically what happened with the sector rotation in that case, you can see energy was the leader, up 43%, while staples were okay. The second best was really utilities. Well, going forward to this week, you can see we didn't do quite as well. We just added the extra week and we fell down a little. Well, actually, energy rallied 43. It went up to 52.96, while we had the utilities go from 873 to 815, and staples fell. That just completely went down. However, everything else was pretty bullish as far as the defensive sectors there. So we'll see if that's going to continue. Just looking at this week, okay, that's all it is. This is this week from Monday through Friday of this week, and or actually the 13th. It's about 6 trading days. You can see that this is the only sector that was really bullish was energy, and it's barely up 1.25 points. Considering the markets were crashing, you'd expect to see staples doing a little bit better. It's not. It's really odd. The normal sector rotation is a little bit off. So we'll take a look at some of these individual sectors and see if there's still opportunities. Looking at the energy sector, XLE, what happened here on the daily chart, you see we did make a new high in price, but couldn't with the indicator. That's a negative divergence. That usually suggests that prices are going to drop pretty soon. Okay, so with the XLE pulling back a little bit here, you see we already had a bit of a pullback to 50% after we fell. Pretty much gapped down to that area. I don't see us really recovering here. It looks like it wants to go down even more. So moving on from the XLE daily chart, what I have is Baker Hughes, which was one of the stocks we looked at. Going back to the 13th, you can see I was somewhat bullish on this. We were having some trouble getting above 60 though. And this was one of the shining stars that really caused us to move up the week before. Not this week, but last week. And again, I was watching this and saying you got to be careful because when you can't get above 60, we're not going to be able to break out some new highs. Well, moving forward here, let's see what happened. Oops, there we go. Baker Hughes, this was on the day I showed you. And going forward, look at this. We could not break out of that prior high. This is ready to fall over. Maybe we get a nice bounce at 32.13, 30.88. But overall, the fact that we couldn't get above 60 and actually just went sideways, that's showing failure that move to the upside. And if we do pull back, if we go below 40, we'll actually break that demand zone. If we can hold above 40, then that demand has a chance, and we could actually break out above the previous highs over 38. So definitely be watching 32.13 for potential long. Again, I need the bullish momentum to be there. If it's not, I don't take the trade. So Baker Hughes, let's see, what was this? That was on the daily. What do I have here? 1 hour time frame. On the 1 hour time frame, there may be a counter trend trade as well. As you can see, we're consolidating. We've got kind of a symmetrical triangle forming right now. Very long one, but you got lower highs and higher lows. And we're losing momentum as we're getting closer and closer to 50 without going to extremes anymore. So what that means is there may be a chance to short for $2 where you break out below 34. And again, I usually wait for it to retest that area before I go short and target the 32. So that'll be something I'm going to watch for. A possible counter trend trade on Baker Hughes with a short. Stop loss, you can usually do 1 ATR on the time frame you're trading on. Since this is a 1 hour time frame, let me just show you. Go out to BKR, 60 minute, and we're on that. So right now, what I would wait for, again, is a break of this 34 trend line, but a retest of it. And then what I would also do is add in average true range. And you can see it's about 50 cents, we'll call it 49.50 cents. So if we end up shorting here at about 34.05, my stop loss would be 34.55 or 54, basically, if you want to do the full 54. You get it quite right. You get the idea. 1 ATR above wherever your entry is. That's all. And target that area for a bounce. So I would go short after the breakout. I would wait for a close below and a retest of that area to sell with my stop 1 ATR above. And I use the ATR for the time frame I'm trading on. Average true range shows you the volatility. And that's it. Target that demand zone. So we'll see if that ends up working. Moving along here. Also looking at utilities, another one that was doing well for this week. You can see the sector was okay. Wasn't great. Okay, remember the energy sector was the best performer. That was about 1.5% last week. This was still positive, as you can see. There's a lot of green for the week. NRG was extremely bullish, though. and that was 8.11. I believe that was one we looked at last week as well. You can see the utility sector here. That's what we're looking at, utilities, right? So looking at the utility sector, we've got some weakness coming in. We ended up tagging that supply zone multiple times, I believe. I came close to it, actually. Didn't tag it multiple times. You can see, though, Monday, Tuesday it was right there. It bounced off it on the daily chart. And we just don't have enough momentum to really go anywhere. So we should be pushing down towards demand at 65, 68. But if you got short, you're great. If not, don't chase. You're going to ruin the reward risk ratio. So actually, this was the week before. That's what it was. Okay, I missed. Okay, that was the opportunity the week before. This is where we went this week. That's where I came up with the second touch. I knew there were multiple touches there. You can see we've got the second touch there already. And again, just not going anywhere. But this time, as we dipped down, we didn't go below 40. So if you were short on this, be careful, because we're seeing some buying pressure underlying this, maybe getting ready to push back to the upside even. So be careful there if you did get short, because it does look like there's possibly pushing back up. Doesn't want to drop yet. It also doesn't really want to go up either. So it could be stuck going a little sideways. There's better opportunities out there. NRG, this is one that I was looking at, I believe. Yeah, this was last week. I was looking for an opportunity to buy on the pullback to 41.22. Yeah, it was. This is the last week's video, I think. And unfortunately, it never came back for us, as you can see. So this is the 1 hour time frame. This was back on, I think, the 15th or so, 14th last week. And you could see what happened from that area. We shot to the upside right there, never came back. So unless you bought the breakout on that Monday, oh well, it was right on the direction. It just didn't actually execute. So I don't have any new entries here. We are possibly forming a new demand zone, and we still have lots of bullish pressure on NRG. So it could be a leader again this week. So some other past idea follow-ups I wanted to go through, because I looked back to see in our previous videos what happened. We had an opportunity. We looked at EOG, and with EOG, I had the 118.46 demand to 112.10. You can see it came into play in early May, multiple tests of that area. And unfortunately, this one is going to get stopped out if you're not out already. What happened was we started moving up, made it more than halfway to our first target, which is the extension. And now the fact that we couldn't get above 60 right here and started moving down, that's showing weakness. So you need to put your stop at least a break even, if not underneath this green candle, to lock in just a little bit of profit, because we're getting weakness coming in. It could push us down. So keep an eye out for that on the EOG. KHC short. This is Kraft Heinz that I picked out a short opportunity on. I was originally looking to go short here, but the problem was when we came into the zone, we had too much bullish pressure, and you can see we overshot the zone. So while the idea worked long term, there's no way you would have been able to sustain that particular drawback in price. And typically, I don't short if we're above 60 on the RSI anyway, so that would have been a no trade. Even though it eventually worked, it just wasn't executed right. It just didn't work out for us. No big deal. Anyway, looking at the sectors that are performing well, healthcare. This is over the last week, I believe. We have a little bit of positivity going on there. And looking at the healthcare sector, this may turn around now. You saw that actually going back in my comparison chart, it was one of the weaker sectors. Not really one of the weaker ones, but it was negative, slightly negative. And I think that may continue. We had a small bounce going on, and this is a daily time frame. You can see this week, obviously Wednesday when everything went down, it went down too. We had a positive divergence, or no, sorry, not positive. We went lower on the indicators there. So that's likely to take us lower in price, although yeah, I think we could be moving sideways for a bit. It does want to look to hold this downward trend, but the fact is we didn't go below 40 on the RSI here, so I think the healthcare sector might be spared a little bit, but individual components might be a little bit more bearish. Right here, I'm looking at Lilly. We had a negative divergence that led to this push down, and the rallies we're getting right now, we are not getting momentum to sustain those. So I'm thinking Lilly, if you can go in on an intraday chart, there may be a move. I don't have a supply zone to get in here on the daily chart, but what I really believe is that Eli Lilly's getting ready to drop down towards that 250 area. That's the next strong area of demand, and you're seeing the weakness here where prices are moving up, but momentum is not really getting high enough. So if you get another move like that where you can't get above 60, expect the big drop, and you might be able to play the break out of this overall channel that we're in right here if you drew those upward trend lines right there. Another one is Pfizer that is going to be showing a little bit of weakness. I'm watching Pfizer very closely. Same thing happened where the negative divergence led to this pullback in price. Now we're trying to scramble back up to the supply zone at 53.10 to 53.93. The key is going to be how much momentum do we have? As we reach that area, if we're above 60, leave it alone. If we're below 60, I would expect a short opportunity down to about the $49 region. So it'd be good for about $4 to the downside. But we got to make sure we don't have too much momentum to carry us through. So I'm going to look to see if we get some sort of divergence, maybe bounce in that area a couple times before we leave, and watch the RSI going down rather than up, and that would be what you need in order to get in. As far as consumer cyclicals, normally I think of stable cyclicals are the ones that move down when the markets are bad, and you can see it's bleeding red, except for TJX and Booking.com. It's kind of interesting. I forget what this one is. Oh, there it is. It's Rollins Inc. So Rollins Inc. is the one shining star in that whole sector. You can see it's the brightest green. It was up 3.61% for the week, even though the entire sector is out of favor. So we take a look at this, and we may be getting ready for a short opportunity. This might try to catch up. It was the only one moving up, and everything else has been moving down. You can see we're coming into a drop, base, drop supply zone for the second time. If we hit that supply at 35.44, but we don't make a higher move on the RSI above 67, basically we need to go above 68. So if the RSI is lower as we hit that area supply at 35.44, I'm expecting a shorting opportunity targeting number one, 33.50, number two, basically $30, which is actually a tested zone as well. So this may be the opportunity to short the bullish security in the bearish sector that's getting ready to give up. So we just got to make sure the momentum's on our side. Moving on across the globe, we're going to go to India now for my final section. And looking at the week of May 22nd for Nifty, it's still bearish. We're just moving down, lower highs, lower lows. That's a bearish trend. It's widening a little bit, so I was surprised that we stalled out just before we hit the 14,928. You can see we went a little tip below 40, which means this rally up, we might stall out if we get some bullish activity right here, drop, base, drop at about 17,000. I would say that is your overhead weekly supply. Probably won't happen this week. This week, we could get some bullish pressure to push us up towards that area, but eventually I'm looking to short at 17,000 down to 15. So a $2,000 potential move there. Forgot to mark that off as that supply. Anyway, you can see we're bouncing back and forth. We had a little retracement already for 50%. We might get a little bit more out of this. Remember, I'm looking for it to go up to about 17,000. So that would take us right in here, right about a little more than 78.6% retracement. We'll see. But yeah, this is just not looking strong. I thought we were going to get through the tested demand this week. I was a little surprised to see that the demand held yet again, multiple times really, because we ended up beginning the week. Friday was right there. Then you got Monday, Tuesday testing it, and you got Thursday testing it. But the more you test, the weaker that zone becomes. So if we do start pushing down, and like I said, if we can rally it all, we're going to stall most likely the 17,000 weekly zone and then just drop all the way down to 14,900, 15,000. 4-hour chart, we may actually start to see a little bit of selling pressure coming in at the beginning of the week. As you can see, we are a rally base gap down. Kind of came out of nowhere. We were trying to rally back up, impulse down, retesting the area for people who didn't get to get out before, might end up selling here at the 16,257 to 16,400. Looking at Reliance, this is why we've been holding up. Reliance tried to push to the upside. It did barely poke through its area of supply, but when it did, you'll notice it did not go above 60 on the RSI. So underlying weakness is there. We held a little demand that was formed. We had rally, base, rally with some new highs. So prices held there. See, we were above 40, but we couldn't get above 60. So even though we overshot the supply, I think this is still going to hold and push us down. And if that goes down, so goes the Nifty. Anyway, looking at the Bank Nifty, still pretty much the same picture, honestly. There's that move down. We did stall out just a little bit, but again, we went below 40 on the RSI. So I think any kind of a bounce is just going to be short-lived. And you do have, I suppose, drop base drop supply right here. Not the best of ones, but if the overall trend is weak, we may just hit the trend line anyway. And on the Bank Nifty intraday, sorry, this is the daily chart. That was the weekly, wasn't it? The daily chart, I don't really see any opportunities here. We're just kind of retracing. We've had a very weak retracement. Interesting enough, there's an inverted head and shoulders here. But there it is, left shoulder, head, right shoulder, and that could lead to a push to the upside for the market. Okay, head and shoulders follow through on the indicators just like they do in price, and they usually push prices in that direction. So that's suggesting with an inverted head and shoulders, we might actually rally up to 35,880, at least 35,200, close the gap. So that's what I'm seeing in the beginning part of the week. Ultimately, you'll end up getting more shorting opportunities after the rally, though. That's what I'll look for. Anyway, that's well, this is just showing you kind of what happened for the week overall when it goes back to the stock market for the U.S. This is the month's performance. You can see a little bit of healthcare and the energy markets are really all that was the bright light out of there for the whole month. And that's where I'm seeing it's continuing. I don't see us really pushing up in the overall markets, both in the U.S. or in India or anywhere in the world. I see that we're going to go into global economic slowdown and maybe another recession very, very soon. So keep giving you the best information that I can from my perspective, and we'll see if the Wendell effect affects you. So until next time, trade safe, trade well, everyone. Take care.